Sure, the melt up may continue. We may miss out on some gains to the upside if you're on the sidelines like me. But for me personally, and I do have some long positioning, but I would like to get more. What this does for me is it tells me, okay, historically speaking, we tend to see a moderation over the next 1 month. And that may give me the opportunity to see some kind of a pullback that could be a viable dip for me to watch out for. So that's kind of my game plan with indices. If we take a look at the dollar index continues to kind of move lower. We've double topped up here around this 100.5 level. We've lost a little bit of that risk premium due to the geopolitical conflict stuff coming down. But the market may be calling a bluff here. And what I mean by that is that we have these negotiations and we don't even know if they're happening or not. Iran is, denying that they're happening. The White House is kind of saying we're going to give up on the negotiations and that bombs might start dropping again. I mean, you have just a fog of war. I mean, that is why the expression exists, a fog of war in reference to the confusion, the uncertainty, the back and forth that is going on right now. And so if you see a re-escalation, the dollar index, oil, etc., are likely to move higher. Meanwhile, that could actually get the stock market to roll over. So that's why I think that the risk reward here on stocks does not look very attractive. Chasing up here, let's say we get a bad headline today, boom, down we go. We could drop 2-3% in a day if things really start to escalate once more. And you see oil prices threatening that 120 mark again, which is possible, right? Doesn't seem like it right now, but you could have one or two headlines or one or two, let's say, military actions that take place. That would be more likely to really get things moving in the oil world again.